It's a warm welcome to Africa 360. We cross the continent for news and views you won't get anywhere else. News with a distinctly African perspective. I am Chris Maruleng, and you're watching Africa 360. In this week's edition, it has been called Africa's infrastructure boom as investors look to our continent for investment opportunities. The building of new roads and railways are in the spotlight. This week on Africa 360, we revisit infrastructure development issues on our continent and discuss the structural barriers that still impede progress. All this and more coming up right here on Africa 360. To many out there, Africa is fast becoming the investment destination of choice, particularly for many investors seeking attractive but scarce returns globally. Of the world's 15 fastest growing economies, 3 years ago, 11 emerged from our great African continent, with Ghana at the top of that list, notably ahead of China. The question, though, has to be asked, is Africa ready to maximize and exploit its status as the last frontier for economic evolution? Or is the so-called economic window of opportunity closing without leaving any tangible benefits for African citizens?
The green shoots of hope, new airports and new roads, interstate railway projects, more and more undersea cables connecting the continent to the high-speed internet world, and power production projects springing up. Infrastructural developments are the manifestations of the economic growth being experienced on the continent. According to a recent report by Deloitte Southern Africa, the infrastructure development boom across Africa has attracted investment worth $222.7 billion, with 320 large infrastructure projects underway across Africa. Despite the progress, though, there are still challenges limiting growth. One of the major challenges investors say they face in Africa are the so-called structural barriers. These include strict regulatory environments and uncertain political situations.
There is the political risk which scares the investors. This is the first thing. Second, the PPP laws and regulations are not passed yet in many African countries. These are the major problems. And the PPP concept is not only financial.
Apart from the foreign investment in infrastructural development projects, there are also programs developed at home to address the infrastructure gap. The Programme for Infrastructure Development in Africa, otherwise known as PIDA, is one example. But more must be done to ensure that solid infrastructure builds strong economies.
A very bullish assessment there as far as infrastructure development on the continent is concerned. But as you saw in that report, there are still some structural challenges that need to be overcome in order for this infrastructure boom we are seeing to also benefit the majority of African citizens. It is with this observation in mind that Harith General Partners, the Infrastructure Development Fund on the continent, hosted their 2013 high-level executive dialogue in George, South Africa. The conference theme was Transforming Africa Today, Securing Africa's Economic Future. And Africa 360 was there as media partner. My colleague Nikiwe Bikitsha facilitated a special Africa 360 panel discussion on the sidelines of that conference. Participating in the discussions were Tshepo Mahloele, who is Chief Executive Officer of Harith General Partners, Todd Moss, a Senior Fellow at the Center for Global Development, and Funke Opeke, who is Chief Executive Officer of Main One in Nigeria. Also participating was Opuiyo Oforikokuma, who is the Managing Director of ARM Infrastructure Fund. And this is how our conversation went.
Ladies and gentlemen, thank you so much for joining me.
Thank you.
Without further ado, now, Todd, I'll start with you. What do we mean when we talk about this infrastructure gap in Africa, and how large is it?
We think of a country like Tanzania, which we think of as a poor country, but as a development success. Only about 15% of the population has access to electricity. That obviously can't continue. And if we look at surveys of businessmen across Africa, power, the reliability and cost of power is pretty much at the top of the list for everyone as a constraint on further business and job growth. So it's clear that finding ways to invest more money into power generation and distribution is a critical challenge for Africa across the board.
Now, we've been talking about this for many, many years. I mean, I remember as far back as when it was still the OAU. African countries made it a priority to boost infrastructure. Why hasn't it happened?
Well, I think in the past, a lot of it was a supply-side response. Let's just build lots of big stuff, and it will work. And what happens when you do it that way is you often build the wrong kind of stuff. And in particular, if the financing isn't linked to the construction, if you're not thinking about how are we going to pay for this over the long term, if that's not your starting point, then you're going to have what are sometimes called white elephant projects, which are big infrastructure that actually doesn't do anything. A bridge to nowhere or a power plant that goes into debt and doesn't produce power anymore. What we're trying to do now is to link those investments much more with private commercial ventures so that they can be sustained long into the future and make a contribution to the wider economy.
Okay, let's bring you in here. Who should lead the charge here? Should it be the public or the private sector?
I think experience is starting to show that private sector investment drives greater accountability in Africa. And given the fragile state or evolving state of a lot of our democracies, I think in areas where the private sector has been able to play an active role, our sector, telecommunications being one of that, you've seen tremendous improvements over the past decade of profitable, sustainable growth driven by the private sector. I clearly think going into power, going into transportation infrastructure, not just roads, but rail for the movement of goods, and also air transportation, private sector has to play a larger role.
But for the private sector to play that role, certain guarantees need to be in place. And is the public sector beginning to deliver on those, be it, good governance, for example, or secure timelines as to when those projects will be delivered? Are we starting to see that happening?
I think in most parts of the continent, from my experience, the awareness is starting to come into the public sector, and you're starting to see policies emerge. The right documents are being put forward and the right statements are being put out into the press. In reality, with respect to policy implementation and ease of cutting through the red tape of government, and actually private sector now implementing against those policy frameworks they put in place, there's still considerable amount of challenges.
Okay, I'm going to come back to you and explore what's happening in the telecom sector in a bit more detail and how you got into that. But let's bring you in here because you are one of the biggest players now as Harith as far as managing this 15-year-long Pan-African Investment Infrastructure Fund. What exactly does that entail?
I think we moved from a premise which sort of like said, to get the development of infrastructure going on the continent, you're going to need a longer term outlook and a longer term belief in terms of the continent. To build these roads, these telecoms infrastructures, these sort of like all the type of things that you need to get development going, you need a longer term outlook. You need a longer term payback with regard, and financing that with short term capital is very difficult. And what we had been seeing up to now was capital which wanted to be in and out of projects on the continent within a 5-year sort of like period. To build the infrastructure which the continent needs, you're going to need capital and an attitude which takes much longer than that.
Let's take a look now at what's happening in Nigeria. We've heard what the priorities are and where the biggest gaps are. Nigeria, problems with power as well and roads, much like South Africa in a sense, but even bigger problems. What has been your experience?
Well, as you said, it's a huge challenge. One of the things that we've already done is we invested in, we set up, we financed, and we ran Nigeria's first ever toll road PPP project. So we've certainly had on-the-ground experience and knowledge about what's going on there. We're also co-sponsor with a number of other players, such as Aldwych International, on the Azura IPP, a power project in Nigeria, a 450 megawatt power project. And that is no doubt targeted at challenging and dealing with this power generation problem in Nigeria. But of course, I mean, there are various issues to think about. I mean, part of it is not just money. I mean, money is very important, sure, getting money on the right terms and the sort of long-term patient capital that Tshepo talked about. You can't do these things with short-term money. Mm-hmm. But it's critically about the mindset of people. We need to move away in Africa from the mindset where government is seen to provide everything. I think in one of the previous sessions, Todd talked about the importance of expanding your tax base. For me, the tax base is not just so much about the tax rates. It's about how wide you cast your net and who comes into that. Now, the statistics available in Nigeria, and I dare say in most of sub-Saharan Africa, are quite scanty. But I wouldn't be surprised if you found that no less or no more than 2% of people are formally in the tax base. And that's typically people on pay-as-you-earn schemes, people who are actually in full-time employment and the rest. Because Africa has this large informal sector, there's a huge percentage that are not there. Now, when you couple that with the mindset that it is the role of government to pay for everything, you have this essential disconnect between the resourcing or the funding for these projects and the need for people, the end users, to actually make some kind of contribution.
Now, Todd, one of the issues that we dealt with earlier was the fact that there's this perception of risk about investing in Africa. But from what we're hearing, the returns are far greater, Todd.
Yeah, look, I think that it's very clear you need three things to get the big institutional investors. Tshepo mentioned the African pension funds, which are going to be critical players in funding African infrastructure. There are lots of big institutions outside. I live in the eastern United States. We're now starting to see interest from university endowments, from foundations, and even from some of the typically very conservative pension funds, some of the state employee funds, some of the state teacher union funds, that are now starting to pay attention to Africa. They're starting to get an interest in Africa. So that interest, that first step, is already happening. What you need to make that work is you also need now vehicles and you need scale. So in vehicles, there are just not that many bond issuances. There are not that many funds out there that a big institutional investor can put money in and feel confident. That's why the things that Harith and other players are doing is so important, because they're playing that role of aggregating projects in a way that outsiders could put big pieces of capital to work. I'm glad that you raised Nigeria, because Nigeria is going to be one of these drivers of scale. Sometime in the next 5 to 8, maybe 10 years, but soon, Nigeria will pass South Africa as the largest economy in sub-Saharan Africa. It's 170 million people and rising. It's going to be a major market, and trying to get those projects to scale that could interest some of the large outside investors, I think, will be essential.
All right, fantastic. Thank you. I did say I would come back to you on the telecoms issue. I'm really very interested in this because, I mean, on a recent program that we did, one of our producers was concerned that we had a telephonic interview with someone in India and said, I'm so concerned that the line is going to drop. And I said to them, the line to India will be clearer than the one to PE, which is just down the road from Johannesburg. Why is that the case on the African continent?
The reason is tied to infrastructure.
Yeah.
And what has happened over the past 5 years is a lot of submarine cables have gone in, one which we put down the coast of West Africa, interconnecting with Europe and other parts of the world that are already very well connected. And so the performance in terms of international connectivity with most large cities in Africa has been resolved, so to speak. The challenges you now have are distribution within the continent, moving from the coastline cities to secondary cities to the landlocked countries, and that's why you still have those challenges.
Yeah. At the end of the day, for most of our typical Africa 360 viewers, what they want to know is when are the costs going to go down?
Well, that takes cost down, because if we're not laying 5 cables, but we're laying 2 and we're sharing the cost, you just achieved at least a 50% reduction in the cost of capital to provide that service, which is a huge part of deploying telecommunications. So the policy changes that are required are not just to improve the quality of service, but there's an expectation that they can both reduce quality of service and also reduce costs.
So you said earlier that you had 9 major investments across the continent. Give us more detail about that.
We have partnered with TAV in Tunisia. We have invested in a local airport in Gauteng. We have invested in subsea cables, on the west coast alongside, Funke and her team. And those are the type of projects we've tended to focus on. And in the past 5 years that we've been at this, it has shown that there's a lot of change that is happening. There's a lot of demand. The good projects are able to attract the capital. The projects with the good sponsors are able to attract the capital, and the projects which are well packaged are able to attract also the right sort of capital, and also to be priced appropriately. Because I think, as we said, stated earlier on, the issue of pricing of African risk is one of the inhibitors. I mean, we've seen, earlier on, some of your North American and European, investors requiring, returns north of 20% in dollar terms for investing on a continent. And that makes it difficult to then even start with the project. So therefore, that's why we've been saying, I think the continued appetite by locals and the continued, communication of the, appropriate African risk will maybe start attracting more capital to the continent.
Partnership is going to be important, Opuiyo. You mentioned the models that you have used, particularly for the Leko toll road. There's public-private partnerships. Is that the way to go?
I think it's an important option. I don't think it's the only option. And to expand on that, the reality is that a private investor would only come into a project if he or she saw that the project was economically viable. The conditions existed to make that possible, relevant regulations, etc. And most importantly, that the investor can make a reasonable return. Now, there happen to be some projects, notwithstanding, that may not on their own, without some kind of government subvention or at all, be able to be economically viable. Typically very purely social projects, or if I dare say, politically driven or motivated projects. So it's about choosing very carefully which you want to put in the public-private partnership bucket and which should be the purview of government solely, or maybe even grantor organizations, multilaterals, etc.
Let's take some questions from our audience now. Raise your hand, identify yourself and the organization that you represent. We'll take a question from the back.
My name is Renosi Mokate, and I'm an independent consultant. I have a question relating to the conceptualization of PPPs. You've just mentioned in your comment now that public-private, and when you look at the case of the e-tolling and many other cases of that nature, the question that arises in my mind is that is the model adequate of just looking at the partnership as only private and public? Where does the citizen and where does the community come into the equation? Because I think one of the risks with PPPs is that there isn't always transparency in the contractual agreements, in the selection of the private partners, and then citizens get a sense that they are really getting the bad end of the stick.
I would like to approach it from a slightly different angle. If I didn't make it clear enough in my earlier discourse, I want to emphasize it now. I think the most important player in the piece is the end user. He or she who has to pay for that infrastructure, be it a toll road, be it a power plant, be it a water treatment plant, whatever it is. Because without that funding, two things are very clear. either you're going to have to fall back on the contracts, which itself is a sign of stress and lack of sustainability. And secondly, and most importantly, you're on your way to a bit of a problem if you do it that way. So bringing along stakeholders, engaging them very early in explaining what you're trying to do, and having a mechanism where not just at the very beginning, but throughout the entirety of the project, you have your ear to the ground, you're listening to them, and you're bringing them along is absolutely fundamental.
We'll have another question here in front.
I'm Franny Leotier from the African Capacity Building Foundation. In addition to the bond markets, do you see any other opportunities of getting to scale, particularly given the very successful small and medium enterprises that exist in some countries? Do you see any opportunity in that area?
All right. Todd, let's start with you.
I think the natural entry point, certainly for many investors, is to look at the listed security markets, look at the stock exchange of a country. And that's where the scale issue really, I think, bites very, very hard. Ghana in an entire year will trade about $50 or $60 million on the exchange. Now that's done before the first coffee break in New York or London. Even in Nigeria, which now has a pretty big market, it's up around, I believe, around $60 billion in capitalization. There are only 7 companies that would qualify as mid-cap by using a U.S. definition, which is 2 to 10 billion. 2 to 10 billion. So if you're managing a large amount of money, it's very hard to put that into these markets. So that's where I think these big infrastructure projects could come in to play, because the infrastructure funds can aggregate these large projects and create a vehicle for the large foreign investor that wants to put a big chunk of change to work in Africa.
Great.
Okay. Well, I think scale is something that is yet to come to play in a big way, as Todd said, in the private sector in Africa. Institutions are still being built. When you look at the most highly capitalized companies in sub-Saharan Africa, most of them probably emerged only within the past 10 to 15 years. So I think there's still a lot of work to be done to continue to build structures, to continue to build vehicles for investment. I think it's going to start with what Harith described in aggregating smaller projects which evolve and build capacity to then step up to those larger projects. But given where we're coming from, I don't think there's any way you can just inject scale overnight and effectively manage the delivery of returns or sustainable investment out of that.
All right.
I think it's also we must take cognizance of the context of the continent's development. At which point is it within that development, sort of like scale? It's at a point whereby, as we said, in 2000, we were a hopeless continent. In 2011, we were a rising continent. And with that, we can only achieve so much within a particular point in time. We are now at a particular point in time whereby perhaps, it is more within the private unlisted sort of like, assets that perhaps that we need to start building, capacity. There is not that much depth, as like Todd has mentioned, or scale within the listed sort of like environment, universe. So therefore, the build-up and aggregating of all these smaller projects, of building many 200 megawatt projects, building, many of those, starts building up to meeting that demand in a stepped-up manner, and that starts delivery going. And through that, we are very sure that the next 10 years will look very different to today. But we have to take it within the context of Africa's own development. At which point is it now? What can work for us now? And then, knowing what is possible at a future sort of like date.
Okay. Thank you so much, and we really appreciate your input and your participation here on Africa 360 on this program. And that brings the end to our special broadcast here from George, where some of the top thinkers on the continent and abroad came together to discuss Africa's much-needed infrastructure development. Thank you.
I certainly hope you enjoy that conversation that was facilitated by my colleague Nikiwe Bikitsha there on Africa 360. That does, though, bring us to the end of yet another edition of your program. We'd also like to thank Harith General Partners for organizing that high-level executive dialogue. I hope you've enjoyed the show as much as I did. You can join the debate by liking our Facebook page or tweet us your views on Africa360_ENCA. You can also always send us an email at africa360@enca.com. So until next time, we look forward to bringing you Africa like you've never seen it before. Do take care.